Hi, I'm Anthony Homan. I'm here today with J.R. Rieger and Todd Rosenbluth, who come from J.R. over at the S&P Dow Jones Indices Group. Todd Rosenbluth, our Director of ETF Research at S&P Capital IQ. Thank you for joining us today.
Thank you.
And the two groups operate independently from each other, but collaborate on special issues. J.R., we just finished a webinar on the muni bond market itself, and there's been a lot of negative press around Detroit and Puerto Rico in particular. Can you shed some light on the default risk in those areas as well as the municipal bond market as a whole?
Anthony, you're right. The headlines have been pretty extreme. Detroit bankruptcy, is pretty heavy on the muni market, but the actual default rate for municipal bonds has been declining year over year. 2012, lower than 2011. 2013, lower than 2012. The S&P Municipal Bond Index saw about 23 new defaults occur in 2013, which is down significantly from the previous year. Actual outstanding defaults, we're talking about less than 0.5% in the biggest index we have, the S&P Municipal Bond Index. Less than 0.5% of the bonds are outstanding in default.
And in 2013, we saw rates creep a bit higher. How has the muni bond, the bond market impacted from that rise?
Well, the muni bond market was really in negative territory for most of 2013 with the heavy news media around Puerto Rico and the possibility of other cities defaulting along with Detroit. So that headline risk really rippled through the municipal bond market, had negative performance at the end of the year, down 2.5% to 3%, depending on the part of the market we're talking about. The muni bond market, it was an underperformer relative to other fixed income asset classes as a result of that heavy overcast that these events caused.
Sure, and just sticking with interest rates, Todd, maybe you can inform our audience or remind them how we use duration as we conduct our ETF research analysis.
Yeah, so duration or interest rate sensitivity is a key factor for doing fixed income ETF research, and that's something we use at S&P Capital IQ. The higher the duration, the greater the risk. You often will see a higher yield, which is better for the performance aspect of it, and we use the yield and the duration to play off of each other at S&P Capital IQ with our research. And when we actually are ranking fixed income or municipal bond ETFs, we're favoring a number of those short-term municipal bond ETFs that are not as rate sensitive, and that's some of the things we talked about on our webinar.
And there's some consensus that, with the muni bond market in particular on the ETF side, whether or not the ETFs themselves track headlines or are geared or driven more by the fundamentals itself. What do you think about that?
Yeah, so we think actually there's some good opportunities in the municipal bond ETF market, but as JR touched on, the negative news really contributed to outflows. We saw outflows for much of the year for municipal bond ETFs, picking up, once we saw in May when there was the extra chance of rates moving higher, in addition to the default issues that JR touched on. Interestingly, we've started out 2014 relatively strong. We've seen inflows into some of the more widely held municipal bond ETFs, and that perhaps is a good sign as we look forward.
Well, thank you both for joining us today. And to learn more about our ETF research or about the thought leadership that comes across from S&P Dow Jones Indices, we encourage you to visit one or both of the links on your screen.